threat of 3% was sent to market, in a tailspin. Today wasn't so bad, and we broke through it pretty big.
Well, we've been getting a number of indicators pointing towards higher prices, inflation, if you will. And I think the market is starting to price in the fact that we will get 3 rate hikes. There's no question about that. Now we're starting to see the probability come up for 4. And I think that, so we're starting to see that really get baked into expectations.
Handicap for us and the difference for equity investors between 3 rate hikes or 4 rate hikes.
I think it's going to be 4.
Okay.
I absolutely do.
So does that mean you stay in the market?
I absolutely stay in the market, but you remember, Charles, I invest a little differently, right? We invest thematically. So we're looking for companies that have these pronounced tailwinds intersecting economics, demographics, psychographics. So for companies that are seeing these tailwinds continue to push on their business, they're going to generate immense operating profit growth. It'll be positive to their bottom line. They'll continue to go higher. Companies like Amazon, companies like Applied Materials, companies like Costco.
So you like the semiconductors today?
Yes.
Costco, what do you think? Costco is it's obviously, if it's in your 401k, I don't think you ever want to touch it, at least for not for a long time. But near term, and considering the way the street reacted to Home Depot this morning, which in my mind had a pretty good report, volatility, could all of these names be sort of subject to the kind of volatility that will shake investors out of the market?
Well, a couple thoughts on that. I mean, if you looked at, you mentioned retail sales earlier on the program, 4.7%. Costco's April same-store sales, 7.9%, and that's after, excluding gas, foreign exchange. They're going to open up more stores, more warehouses, and that's the key driver of their operating profit growth. So I just see that stock continuing to move higher, and I'll tell you what, if volatility comes along and knocks it down, I'll be backing up the truck.
The role of the Fed then and 4 rate hikes certainly would tamp down on the market a little bit here. But what about the consumer? Because these names that you're talking about ultimately are consumer driven.
Right.
A lot of anxiety about this consumer that seems in my mind to be reluctant to overdo it. I think it's a fact that people lived through the Great Recession. I don't think they're going to get over their skis like they did in the past. Doesn't mean they won't spend though.
Well, I think they will spend. I think they'll spend more selectively. I think they'll spend more online. The way I look at
Okay, I'm going to cut these guys off. So one thing that they're not mentioning, once again, they're not going to mention cryptocurrencies. They're going to pump Costco, which I don't think is a bad investment. Amazon, you can't go wrong with those. But what they're failing to bring up is debt. If you look at the household debt to income ratio, we actually now have more debt than we did in 2008 when the market crashed. So this reliance on hey, consumers are going to keep spending, earnings are awesome, it's bogus. We've loaded up on debt. There's going to be another financial crunch. There's going to be a bunch of bankruptcies and a bunch of people that need to basically lose their credit and offload that debt so that they can start spending again. And what they're completely missing is that as interest rates go up, and that's why you can see in these prices, the reason why Home Depot and these builder stocks are going down is because real estate is just way too unaffordable, and if interest rates keep going up, no one can even get the credit to buy these overpriced properties all over the US. So my personal opinion, and like I said, I don't understand why the mainstream media doesn't bring this up, but these crypto assets that are now available, and it's still a small market, I feel like it's a great hedge. If the stock market and the real estate market and the bond market all go down, which is usually the case when you saw when the yield of when interest rates are going up like this, there's a very high possibility that we have a market correction, and when this happens, it's better to be in cash. Now I know they mentioned inflation, but when the market does take a dump and when bond prices take a dump, you want to be in cash so you can buy these assets for cheap, just like in the last Great Recession in 2008, 2009. Warren Buffett, all these billionaires became even richer. Why? Because they were able to buy all the assets for cheap. So being highly invested in the stock market, in the crypto market, in the bond market, I think is a bad idea. Even though there is inflation, I feel like holding cash, and my position right now, I'm about 50% cash, 25% equities, 25% crypto. And this is how I'm going to play it. And I'm looking to buy with that 50%, mostly real estate if the prices come down, but if you can get good companies on discount, great. I definitely wouldn't sell your solid stocks. I'm not going to touch my Amazon. I'm not going to touch my Facebook, even though I don't like Facebook. Those stocks I would just sit on. For me, I'm young, so it's not like I even need the money right now. So hold on to your marquee stocks, and hopefully you had bought it at a lower price. If not, no matter what, 10 years, 20 years, those stocks will still go up, so you don't have to worry about it. But like I said, if you're 80%, 90% into cryptos and stocks, and you're like 5 or 10% cash, be careful, because there's going to be possibly, with these Federal Reserve rate hikes, and like I said, watch the news, keep yourself educated. There's a big possibility that we're going to run into some financial difficulty, and you want to be the person that's buying when everyone's selling, right? You want to be the wolf while everyone's chicken little. The world is coming to an end. And go look if you haven't done any historical research, go look at the stock market crash of 2008. Go research other stock market crashes and see how people made lots of money by buying assets for cheap. And hopefully you'll be doing the same. I'm hopefully going to be doing that in cryptocurrency assets and stock assets, but my long-term outlook on crypto is much more bullish than real estate or stocks or anything for at least this year and going into the future, especially with interest rates going up. But let me know what you guys think. I hope you guys like the shades. I decided to just try something new and got some good comments on YouTube, so let me know what you think about that as well, and I will talk to you guys again soon.